What's up, guys? It's Cash Flow Cart. Today we are filming an emergency video, if you will. There's been a ton of negative sentiment, flooding the minds of investors about Apple stock, ticker AAPL. I am a shareholder in Apple. You will see in my March portfolio update that just came out, it is my number one position. However, with this recent 7% pullback in the past 6 days, it's now my number two position, guys. Let's talk about that. 7.2% for Apple. That means nearly $200 billion has been shaved off their market cap. Today, we're going to go through some of the reasons why. And we're also going to go through how you, as a dividend investor, can remain calm throughout this turmoil, as well as potentially take advantage of opportunities, guys. I'm not too worried being a shareholder of Apple, but I do feel the need to address this, and let's get into it. So, the inspiration for this video, it's kind of self-explanatory. Here's a thumbnail I've seen on YouTube. This isn't even one of the worst ones I've seen, but this says, "Is Apple stock in trouble?" And I think a lot of, finance gurus or influencers kind of use bad news or negative sentiment around a stock to kind of, fear monger, if you will, and drive views to their channel. I haven't watched this guy's channel, so, I'm not saying anything negative about him in particular. This was just the first example I saw today, but let's get into it. Let's hear my take on the whole Apple situation, guys. Here we go. So we're going to talk about three pieces of news that have come out recently in the past weeks, and we're going to talk about how that has been affecting Apple's share price. First off, guys, Spotify drama. So I don't know if you guys are Spotify users, but essentially, if you want to upgrade from, free Spotify use with ads, and you want to upgrade to premium Spotify, you can't actually do that within the app. And the reason why Spotify does that, even though it seems like kind of a pain in the butt for us users at times, is because Apple charges a fee, a certain percentage of that sale, through the App Store. And Spotify didn't want to have to deal with that. So they redirected users to, use the web version to sign up for Spotify Premium, if that makes sense. And essentially what happened is Apple got mad about this. They tried to come back at Spotify, and the EU ends up siding with Spotify, fining Apple $2 billion, guys. So looking at this headline, if we take this out of context, that might build up some fear in us. It might drive some fear, but I think it's important as long-term dividend investors, guys, we make sure we take the full story in mind. I'm always talking about this channel. Each stock needs a different lens to look through. And with a stock like Apple, the lens you're going to need to use is they have a boatload of cash, for lack of a better term. So they have $41 billion in cash and cash equivalents, total current assets of $144 billion, guys. Let's just look at their cash number. What percentage of this, what percentage of Apple's total cash is going to be, eaten up by this fine if they end up having to pay it, guys? So let's say Apple has to pay the full amount, that $2 billion, to the European Union for this antitrust act. That still doesn't even make up 5% of Apple's total cash on hand. So I'm not saying this doesn't matter. That's not what I'm saying, guys. But what I do want to say is, don't let one headline deter you and kind of sway you from being a long-term investor in a company that you have, a long-term interest in. And we're seeing this here with Apple. This fine hasn't even gone through yet. there's been a lot of rumors that with negotiations, it could end up being more like 1 billion and not 2 billion. So again, that's going to take out 2.5% of Apple's cash. However, with a free cash flow beast like Apple, guys, they can afford this. Okay, do we understand that? If you are a long-term dividend investor and you want to do this game right, which means holding on to stocks that you have a high conviction in for the long term, guys, every single stock is going to have drama. There's going to be legal issues. Okay. Um, and, hopefully, if you're picking great stocks with great free cash flow growth prospects, these companies, Apple is able to weather these different types of storms. Okay, so that's my take on that. I do think it is a little ridiculous that they came after Spotify for this, considering Apple itself is Spotify's biggest competitor. But, that's the way business goes, guys. And I don't want you guys to see, just one headline like this and sort of freak out, forget all your due diligence, and think, wow, $2 billion, that's a big number. Yes, it's a big number, but let's use our lens here. Let's take the full story into account, guys. I don't want to spend all day on this Spotify thing. It definitely is a bridge Apple has to cross, but it is not, it is by no means a reason to, panic sell as a long term Apple investor. Moving on. This one is a little more material, in my professional opinion, guys. And that's the recent news that, for the beginning of 2024 compared to, last year in 2023, Apple's Chinese smartphone market has shrunk. Okay. Their market share in China has gone from 19% a year ago, and it has dropped to 15.7%. Okay. Just these numbers don't mean a lot if they're not in context. So it is important to note, guys, Apple's revenue from China makes up about 20% of their total revenue. This number is as of February 5th, so very recent, guys. Okay, so their market share in China has slid, you know, three points. And I guess my take on that is, we've seen it in the US market, guys. Um, Sometimes the smartphone environment is kind of a winner takes all or winner takes most type of thing, guys. I am an iPhone user. A lot of you guys are probably also iPhone users. And, unfortunately, regardless of technology or regardless of user friendliness, once you're kind of in this smartphone, iPhone ecosystem, that ends up being what you stick with. So if you have an iPhone, when you upgrade your phone or you have to replace it, odds are you're going to also buy an iPhone. Okay. And as it's Huawei, I don't know how to say it, but as Huawei, their smartphone gains traction in China, it's becoming a little more the norm for Chinese people, guys. And, that is okay. All right. This is like I said, kind of a winner takes most or winner takes all environment, guys. And that's kind of what we're seeing in China. Apple was competing. However, it seems that Huawei is becoming more of the norm for the smartphone in China. This is concerning. I understand that. But let's not throw out the door the bigger picture, guys. And the bigger picture here to me with Apple is that their EPS is up 16% to a new all time high. Okay. So while this 20% sector of their revenue from China, while they have lost some market share, they're still making new all-time high EPS. All this news that came out towards the end of February, beginning of March, it's almost like investors have completely forgotten that Apple reported a Q1 beat on EPS expectations. Okay, guys, so let's not throw this out the door here because of one headline. Okay, so Apple reported earnings on what in the world? Hang on, guys, bear with me. We will go over my position as well. Okay, so Apple reported earnings on February 1st. The earnings per share estimate was $2.09, guys. They came in at 218. That's an EPS beat. That is good for us as an investor. Again, we try not to get hung up on quarter to quarter performances. However, why then are so many investors getting hung up on short term news like this, guys? I mean, we've said it before. When in doubt, zoom out, guys. A lot of my investing decisions are made not by going through news, not by searching, what's trending around a company, guys. I do keep that stuff in mind. However, it's more important to understand, what's happening on a financial level with the company. Okay. So September 2019, 260,000 revenue, trailing 12 months, 386,000 revenue, guys. In just 5 years, that's a 50% growth in revenue. And, Apple's increasing profit margins has allowed them to capture the highest earnings per share in history, guys. Again, this China thing is a little more concerning to me than the Spotify thing. However, as a shareholder, I also realize, you can't win everything, especially on the scale that Apple's at. They're coming into, a lot of antitrust issues, and a lot of investors have seemed to just throw out the door, guys, really how far Apple has come. And they don't really take the proper lens, in my opinion, when they're analyzing Apple, guys. Okay, so there's one more point of news I want to go over, and then we will get into my position. I don't want to go through too much on fundamentals today, guys. This is more of a news based video, more of a remain calm, guys, if we can. So, the last thing I wanted to go through is Apple ending their decade long secret effort to build an electric car. We need to talk about this, guys. So, it's important for us to understand as investors that there is a category of expense that we're going to call research and development cost. Okay. So, research and development, let's say at Pfizer's trying to create a new drug that they can, bring to market. That's research and development, guys. They have employees working on it. Let's say that drug gets shot down in phase 2 testing by the FDA, and it's like, do we sit here and say, okay, all of this research and development, that was all for nothing? That was all a waste of money? No. As investors, guys, what do we realize? What we realize is, this was a necessary process. Okay. Uh, you know, Eli Lilly or Pfizer, when they're developing new drugs and they have them in the pipeline, guys, a lot of them aren't going to pan out. Okay. Can we understand that? And that seems to be a little more accepted in like the pharmaceutical sector. That's why I use that as an example. But we have to remember, guys, it's the same thing for Apple. I mean, this is the second largest company in the world by market cap. There's not a lot of different ways that they can continue to grow their revenue streams, to grow their top line year over year. Granted, they are doing it. However, there's going to be, I don't even want to say failures. I want to say misses, okay? Because now, all that time they spent working on the car, what came out of it, okay? Maybe Apple CarPlay, you know, maybe better AI technologies, that they worked on incorporating self-driving or different safety features, guys. Okay, so what? There's not going to be an Apple electric car in the near future. Guys, this is part of business. Can we please understand that? And to me, you know, Apple doesn't have some crystal ball, okay? Maybe when Apple started creating that electric car, they really thought electric cars are going to be, the thing of the future. They saw Tesla's explosive growth in 2019 and 2020, and they thought they had to continue working on the project and catch up, guys. However, in the grand scheme of things, electric vehicles are losing a lot of momentum with US buyers, okay? So, I've pulled up a graph here. I don't know if it's the most helpful thing ever, but we can see US electric vehicle sales change from a year earlier. Okay, so as of November 2023, electric vehicle sales were up 42%, from that previous November. Does that make sense? However, they're losing momentum in the sense that as in April 2022 and October 2022, these year over year rates were even higher than they are now. Does that make sense? So, maybe this electric vehicle adoption isn't taking place as fast as a lot of big businesses candidly expected. Okay, Tesla's seen issues with it. They've had to reduce prices on some of their vehicles. I know Ford's seen a lot of issues with it, a lot of backlash. um, I mean, Dodge, for example, just released their 2025, Charger completely electric, and they're already getting completely bashed before that car's even hit the roads. So, you know, Apple did not have a crystal ball when they took on this electric vehicle endeavor, a decade ago. It didn't pan out perfectly like they planned from the beginning, but that's business, guys. They're able to pivot, they're able to, salvage this Apple CarPlay sort of technology, and they're able to repurpose those employees into the AI space, I guess, which they think is a better use of their time and resources, guys. That's business. So the fact that this piece of news is being used to drive, negative sentiment around Apple stock is, quite honestly pretty astounding to me. We will look at my Apple position today, guys. I am a shareholder. I said it's my second biggest position. I do portfolio updates every month. So if more on that, you can check out my March one. I have 63 shares long in Apple at an average price of $117.30 per share. I guess that puts me at an open profit of $3,229.42. And you guys probably don't care about the P&L day on like an open position, but it's $30 loss as of today. We mentioned Apple is on a 6-day losing streak, guys. So, let's look at the chart here and let's kind of walk through, the bigger picture of things. So as an Apple shareholder, I originally bought in 2019. There has been some trimming. If I saw, some sort of overbought indicators on Apple. However, at this point, I don't plan to trim my Apple position ever again. After we zoom out, we can see, what is it here, guys? All-time high of 200 even, pretty much, for Apple. The pullback from that all-time high is 14.5% or 15%, guys. And even with that recent pullback, when we zoom out and see the full picture, we can understand, how explosive Apple's growth has been, at least on a 5-year, 10-year basis. And, even with this recent pullback, I'm not personally interested in adding. I'm just going to continue to hold my shares. I've got here kind of this shaded area between, I guess, 135 and the 155 mark. That is when I will revisit this one, become a little more interested in asking myself, okay, do I want to bulk up this position? Do I want to slightly increase my cost basis just to have more Apple shares in my account, guys? But as of now, I'm on the sidelines with Apple. I am not panicking about any headlines, okay? I'm taking the full picture in mind, and I'm going to continue to enjoy my beautiful cost basis on this one. I'm going to continue to enjoy the free cash flow growth that Apple's been able to show us, guys. And I'm not going anywhere. Thank you guys for tuning into this video. I will keep you updated on any moves I make with Apple. If it does slide a little more, I do think this one is going to have to see, a lot more negativity before I become interested in it. Again, especially with it making up, 20% of my account right now. But guys, it's been a blast. Everyone take care. Have a great day. And if you don't mind, hit that subscribe button or hit that like button, guys. I'll catch you in the next one.